markets don't always behave in a predictable manner. I think, we all know by and large, India is the fastest growing economy, major economy in the world right now. Whether it is 7.5 or 7 or 8, we will still be the fastest growing economy. But the reality is that's 1 year. But all of us collectively, hopefully, want to achieve that $5 trillion target, which has been set out by the government of India and the Prime Minister of India. And that will require a lot of, how do we create more employment? How do we make sure there is more investment activity taking place? How do we channelize savings from relatively dud investments into more productive investments? How do we reduce inequality, right? You could become 5 trillion, but let's say of the incremental 3 to 5, you could have 100 families own bulk of it. So, that won't change the lifestyle. The GDP growth is all about the average Indian feeling better. How do we put more money in the pockets of the average individual? And I really hope some of the discussions also are able to cover some of these macro matters also. And personally speaking, I have to say, I have never been this bullish about the economy in the last, going back to 2006 or 7 or so. I have the privilege of talking to corporate leaders, fund managers, investors, wealthy individuals, MSME companies, senior professionals like Mr. Hari Bhakti here, etc. And I haven't got this level of positive feedback.
Today, I wanted to throw out some pressing questions on the state of India's economy and take a stab at answering them. So here's my first question. Is growth in India slowing or is it soaring? Because there is evidence of both right now. And I would answer that currently growth is pretty strong. In fact, we get a lot of data for India, and we find that about 60% of the indicators we track are actually continuing to rise, so growth is pretty strong. And some of the good sectors right now are the services sector and also the agriculture sector. We generally find that the domestic drivers of growth are doing much better than some of the foreign drivers of growth, for example, exports, at least at this point. This is new economy versus old economy. The new economy, the 3 sectors that I pointed out, are very exciting. They are leading growth. Old economy is weaker, and this is the story of growth right now. If we only bank on this new economy, these startups, high-skill exports, then I think our GDP growth can rise from 6 to 6.5 in the next couple of years. Is that good enough? No, because that will not create the jobs India needs. But there are other opportunities. If we can have a way in which new economy spills over into old economy, old school manufacturing, old school infrastructure, then we can actually raise growth quite a lot. And I estimate that India's GDP growth can actually rise up to 7.5%. And at those rates, we will be able to solve most of our jobs problem.
Hello and welcome to the HSBC India Investment Summit in association with CNBC-TV18.com. We're all gathered here today to witness the remarkable journey of India's wealth management and investment landscape despite the repeated uncertainties cropping up. So over the past 20 years, we've actually seen a lot that has happened, but personal financial wealth globally has nearly tripled, rising from $80 trillion in 1999 to $226 trillion at the end of 2019. The world around us has changed manyfold in the last decade, and this change is striking in the wealth and investment sector. In 2000, there were just 9 billionaires in the country. Now there are 119. With the global markets giving rise to more millionaires and billionaires, India is set to lead the worldwide growth of ultra-high net worth individuals. So keeping an eye on this rapid rise that we are seeing in the number of investors in India and across the world, this evening is aimed at putting focus to this new wave of wealth creators. So we have a very special set of conversations that's lined up tonight with key stakeholders, financial and wealth management experts as they engage in insightful discussions on alternative investments, international and domestic markets, and the trends that are impacting the wealth management ecosystem at large. So India is racing towards achieving the $5 trillion economy target, and its impact on wealth creation is something that we have to debate about. To accelerate this further, there has been an extraordinary influx of newer products and assets of wealth creation that have hit the market. So today, we're going to explore how this new potential has risen in the wealth management space and gauge how it is going to unfold from here. So let me request our first set of panelists to please join me on stage to chat about just this. So this $5 trillion economy, right? So a lot has been spoken about, written about it. But Tushar, I want to begin by asking you that, where exactly do you think India is positioned right now in sort of trying to work towards that target?
No, I think one of the things we should possibly be very, very comfortable about is that there are very few countries in the world today which are close to where India is. I'm not saying we are at the very top, but when we look at the growth potential, with the kind of size that we have in our economy, the sheer underpenetration of all goods and services within the economy so far, and just the demographic story in terms of how it will unfold. If everything goes right, I think this $5 trillion target is not really very difficult to achieve. The problem always comes in terms of either something which is outside of this equation, which could be a geopolitical situation, or it could be something unforeseen at this time, is the only reason why I feel that it'll not get there.
Mr. Shah, the target was to do this by, March 2025? We may be well on track, but are we going to be there by the target date? I mean, given, like Mr. Dave also said that just as of last year, we couldn't tell what's happening. And we thought 2022 is going to solve all our problems. Now we know it's never, never turns out the way you imagine. So will we be there by March 2025?
So when this target was announced in 2019, no one had a clue that COVID will come. Last month of 20, whole of 21, and to a great extent, first half of 22 got impacted by COVID. So logically, 25 becomes 27. And like our bosses give a stretch target, I think PM also gave a stretch target to the India. So maybe add 1 year there. So I think somewhere around 28 will be normal target. A stretched 27 possible. Miracles do happen. And IMF has mentioned 29. So I'm sure it will be better than that. But please remember, the young entrepreneurs of India are today committing as much capital with little bit of apple to orange comparison as Tata's, Birla's, Ambani's, Adani's, and BHEL and SAIL and HPCL and IOC put together. This is why I think we will achieve 5 trillion. And more importantly, we will lay the roadmap so that instead of 5, we will go to 10 and 15 and 20.
Prashant, you spoke about manufacturing, right? What are the other growth areas you see, or rather, what can I say? Where are the sectoral opportunities that lie as we head towards this 5 trillion target?
See, I think the biggest opportunity is India, and I'm not trying to evade what you asked, but look at it this way. Sensex has gone from 100 to 50 odd thousand in 45 years roughly. So it's doubled every 5 years. It's doubled 9 times. So 100 became 200, 400, 800, 1600. And if you double 100 9 times, you will reach 51,000. And that's not a coincidence. It is because the nominal GDP of this country has grown by 14% a year over these 40 odd years. And if you grow something at 40 years, it doubles every 5 years. So if you double it 9 times in 45 years, 100 becomes 50,000. So I think that is the real big opportunity. And because equities in India, I think, will continue to compound. And I think, as I said earlier, the next 10, 20 years, I think are more promising than the last 10, 20 years. Because we have indeed gained competitiveness over China. China is exporting $3 trillion worth of goods, which is equal to the size of India's economy. So it's a very, very large opportunity.
So gentlemen, thank you very, very much for spreading the optimism this evening. So as we move on now to finding the alpha, because we've already established that investors are here in large numbers and they're here to stay. Now, what do they want? They want alpha. So let's explore the realm of alternative investing more closely with our next group of experts. Are there enough numbers, or is there enough of a universe in India for the alternative investment platform to sort of tap into?
The alternate funds platform essentially is providing innovation to the clients. What you have in the mutual funds is, as everyone mentioned, a straight-jacketed solution which a customer can come in and invest in. If he wants diversification, if he wants asset allocation, then the vehicle to go to is the AIF or the PMS platforms, because that is where you have most of the diversification in products and offerings that the client really is looking to get, but he's not getting through the mutual fund route. And if you look at the international market, what's happening in the global markets is that mutual funds are becoming more and more passive. And innovation is shifting to the hedge fund industry. And that's where you're seeing different kinds of products coming into play, and where investors, wealthy investors, knowledgeable investors can invest in those products. I think the AIF route, the PMS route in India is akin to that.
In the first 10 years of growth of the MF industry, it grew about, that's from the privatization and from when data is available, it grew at about 12% per annum. You look at from the data, when the time when PMS data is available, it started earlier, that's about, I think 2009 or 2010, it's about, I think, 13 or 14% per annum. And you look at the AIF industry growth, that's a whooping close to 100% per annum. 100% per annum between 2012 to now is an incredible growth rate.
This is a segment where, I can imagine that there is the possibility of superior return, but it also comes with higher risks. So how do you manage investor expectations at a time where, people are still struggling, a lot of people, and I don't mean only the small ticket investors, many large ticket investors are still struggling to understand some of the complexities of mutual funds. So how do you manage, or how do you suppose it should be done?
See, I think, when you talk about a AIF or a PMS, it's only a type of regulatory license, right? Ultimately, the return comes, let's say if we're talking bonds, real estate, equity. Ultimately, the return comes from the asset class and the skill set of the manager who's managing the money or making the investments. A mutual fund, PMS, AIF, each one is just a type of regulatory license which allows you to do certain things and not do certain things. So first of all, I would refrain from thinking or saying that by nature AIFs are more risky, right?
Okay, so interesting times ahead. Gentlemen, thank you very much for joining in to talk about this, I wouldn't call it new anymore, but evolving platform. So thank you very, very much.